Most people spend their entire lives working hard, clocking in every single morning, giving their best hours to someone else's dream, and yet, when they finally sit down and look at their bank account, they feel nothing but emptiness. They wonder where all the money went. They wonder why, despite years of effort, despite promotions and pay raises and sacrifices, they still feel financially stuck, still feel like they are one emergency away from losing everything they have built. And here is the painful truth that nobody wants to say out loud: working hard alone will never make you wealthy. It never has, and it never will. Wealth is not built inside a paycheck. Wealth is built inside a strategy. And the moment you understand that distinction, the moment that idea truly lands in your soul, everything changes. Not someday, not eventually, everything changes right now, in this moment, because your mindset shifts, and when your mindset shifts, your actions follow, and when your actions follow with discipline and clarity, your financial future begins to look completely different from your financial past. That is not motivation talk. That is mathematics. That is the reality of how money actually moves in this world, and today, right here in this video, you are going to learn exactly how to step into that reality for yourself. Now, you might be sitting there thinking that investing is for rich people, that it is complicated, that it requires a financial degree or a fancy advisor or some secret knowledge that only Wall Street insiders possess. You have probably heard terms like stocks, ETFs, portfolio diversification, asset allocation, and felt your eyes glaze over, felt that quiet voice in your head whisper that this is not for someone like you. But I want you to stay with me, because that voice is lying to you. That voice is the voice of a system that was never designed to teach you how to grow your money. Schools did not teach you this. Your parents probably were not taught this either. And so the cycle continues, generation after generation, hard-working people trading time for money and never learning how to make money work for them instead. But that cycle ends today. Not because I am going to overwhelm you with jargon or drown you in complicated charts, but because I am going to walk you through something powerful, something practical, something you can actually use starting this week. A personal investment strategy built from scratch, built around your life, your income, your goals, and your specific comfort level with risk. This is not a one-size-fits-all template pulled from a generic finance textbook. This is a living, breathing framework designed for real people living real lives, people who have bills to pay and dreams to chase and futures to protect. By the time this video is over, you will not just understand investing. You will have a complete beginner-friendly blueprint you can start building on immediately, and that is a promise worth staying for. Every great investment strategy begins in the same exact place, and that place is not the stock market, it is not a brokerage account, it is not even a number in your bank balance. It begins with self-knowledge. It begins with you sitting down, quietly and honestly, and asking yourself 3 fundamental questions that will shape every single financial decision you make from this point forward. The first question is this: what do I actually have to work with right now? Not what you wish you had. Not what you are hoping to earn next year. What do you have today, this month, this paycheck? Because investing is not about waiting until you have enough. Investing is about starting with what is real, what is present, what is yours right now. Even if that number feels small, even if it feels embarrassing, even if it is just $20 a month, that is your starting point, and starting points are not meant to be impressive. They are meant to be honest. So you look at your income, you subtract your essential expenses, and whatever remains, even a small portion of it, becomes the seed of your future wealth. A seed does not look like a forest, but given the right conditions, given time and consistency and intention, it becomes one. The second question you must ask yourself is, what am I actually investing for? This sounds simple, but most people skip it entirely, and it is the reason they lose motivation 3 months in and abandon their strategy before it ever has a chance to grow. Your goals are your fuel. Without them, investing feels abstract, feels like a chore, feels like something you do because someone told you to. But when you tie your investments to something that genuinely matters to you, your children's education, your retirement, your dream of owning a home, your desire to one day stop trading time for money, suddenly every contribution you make carries weight. Suddenly, the discipline required to stay consistent does not feel like sacrifice. It feels like progress. So write it down. Be specific. Do not just say you want to be wealthy. Say what wealthy looks like for you, put a number on it, put a timeline on it, and let that vision pull you forward every single time the market dips and fear tries to talk you into quitting. The third question, and perhaps the most misunderstood one, is this: how much uncertainty can I genuinely handle? This is what the financial world calls risk tolerance, and it is not about being brave or being afraid. It is about being honest with yourself about how you will emotionally respond when your investments go down, because they will go down at some point. That is simply how markets work. If seeing a temporary loss would cause you to panic and sell everything, you are a conservative investor, and your strategy should reflect that. If you can stay calm, stay the course, and trust the long-term process, you have a higher risk tolerance, and your strategy can be more aggressive. Knowing this about yourself before you invest a single dollar is not weakness. It is wisdom, and wisdom is always the foundation of a strategy that actually survives the test of time. Here is where the story gets uncomfortable, and I need you to stay with me because what I am about to share with you is the part that most financial channels will never tell you, the part that gets quietly swept under the rug while everyone is busy talking about hot stocks and overnight success stories. The truth is, the majority of people who start investing fail. Not because the market is rigged against them, not because they lacked intelligence, not because they did not work hard enough, but because they walked into one of the most predictable, most avoidable traps in the entire world of personal finance, and nobody warned them it was there. And right now, at this exact moment in this video, you are standing at the edge of that trap. So pay attention, because understanding this could be the difference between building lasting wealth and watching everything you worked for quietly disappear. The first trap is called emotional investing, and it is absolutely devastating. It happens when people make financial decisions based on fear and excitement rather than strategy and data. They see a stock exploding on social media, they feel the rush, they pour money in at the peak, and then they watch in horror as it crashes back down. They panic, they sell at a loss, and they walk away telling themselves that investing does not work. But investing did not fail them. Emotion failed them. The market does not reward excitement. It rewards patience. It rewards the person who builds a plan and follows it with ice in their veins, even when every headline is screaming that the world is ending. And the painful irony is that the moments when the world feels most financially terrifying are historically the greatest moments to invest, because that is when prices are low, when opportunities are wide open, and when the disciplined investor quietly builds the foundation that the emotional investor just abandoned out of fear. The second trap is even more dangerous because it is disguised as wisdom. It is called waiting for the perfect moment. People tell themselves they will start investing when the market stabilizes, when they earn a little more, when things settle down, when life gets less complicated. But here is what the data shows. Here is what decades of market history confirm without a single exception. Time in the market always beats timing the market. Every single year you wait is a year of compound growth you can never get back. Compound interest is not just a financial concept. It is the closest thing to magic that the real world contains, and it only works in your favor when you give it the one ingredient it absolutely cannot function without, and that ingredient is time. So the suspense I want you to feel right now is not about whether the market will go up or down tomorrow. The suspense I want you to feel is this: how much longer are you willing to wait before you decide that your future is worth starting today? So now you have your foundation. You know what you have to work with, you know what you are investing for, you understand your risk tolerance, and you understand the traps that destroy most investors before they ever find their footing. Now it is time to build. Now it is time to take everything you have learned and turn it into a real, tangible, personalized investment strategy that you can begin executing with confidence, clarity, and purpose. And it starts with understanding 3 core building blocks that every successful long-term investor uses, regardless of how much money they have, regardless of where they started, regardless of how late they think they are. These 3 building blocks are individual stocks, ETFs, and diversification, and when you understand how they work together, when you see how elegantly they complement each other inside a well-constructed portfolio, you will wonder why nobody ever explained it to you this simply before. Individual stocks are ownership. When you buy a share of a company, you are not gambling, you are not playing a game, you are becoming a part owner of a real business, and when that business grows, your investment grows with it. The key with individual stocks is research and patience. You choose companies you genuinely believe in, companies with strong fundamentals, consistent revenue, and a clear vision for the future, and then you hold them long enough for that belief to be rewarded. You do not chase trends. You do not follow social media hype. You buy with intention and you hold with conviction. ETFs, or exchange-traded funds, are your safety net and your engine simultaneously. An ETF bundles hundreds or even thousands of stocks into a single investment, which means when you buy one share of an ETF, you are instantly diversified across an entire sector or even an entire market. For beginner investors especially, low-cost index ETFs that track the broad market are one of the most powerful, most proven wealth-building tools ever created. They require almost no active management, they carry lower risk than individual stocks, and historically they deliver consistent, reliable long-term growth that outperforms the majority of professional fund managers year after year. And then there is diversification, which is not just a strategy, it is a philosophy. It is the understanding that no single investment, no matter how promising, should ever carry the full weight of your financial future. You spread your money across different asset types, different sectors, different geographies, so that when one area of the market struggles, the rest of your portfolio holds steady and keeps growing. You build a portfolio the way an architect builds a structure, with balance, with intention, with every piece serving a purpose. Start small, stay consistent, increase your contributions as your income grows, and never stop learning. Review your portfolio every few months, realign it with your goals, and trust the process even when it feels slow, because slow and steady in the investment world does not mean weak. It means unstoppable. Your personal investment strategy is not a destination. It is a lifelong practice, and today is the perfect day to begin. If you are benefiting from our topics, please subscribe, like, and turn on the bell notifications so you can see our new videos early.